More participants coming in. This is good to see. Numbers are increasing. Good morning, everyone. We'll be starting soon. So good morning, my name is Lisa Ashford. I'm CEO of Ethex and Energize Africa, two of the UK's leading impact investing platforms. Welcome to our Cuppa Club. I'm not sure what number it is now. We've done quite a few of these, so it's getting up there in terms of numbers. I'm delighted to welcome to Cuppa Club today two great pioneers of the industry. So firstly, we have Dirk Huysmans. If you'd like to give us a quick wave,
Hello.
Dirk, who's Pioneer Fund Manager for Triodos Investment Management. And joining us shortly, who is hopping from another webinar, he's a popular man, will be George Latham, who's Managing Partner of WHEB Asset Management.
I've joined. I'm here.
Oh, look at that. Perfect timing. Hi, George.
Hi.
So thank you both. Today we're going to be talking about funds. And as you may well know, Ethex, as well as raising primary finance for a number of social enterprises and pioneering profit for purpose companies and charities, also we try and list the best of the rest in terms of what's out there for retail investors to invest in. So we very much like WHEB and the Triodos funds in terms of their great impact that they have. So before we get started, let me just do a little bit of housekeeping as ever. So today we've got 45 minutes to an hour for the webinar. Both George and Dirk will be introducing their funds. And I'll be asking both parties a series of questions. We will be opening up to your questions throughout the webinar, so you can submit these via the chat function, and I will either feed those into the discussion or I'll do some quick-fired questions towards the end. And obviously, we always mention that this discussion should not be treated as financial advice in any way. We can't answer any specific questions relating to your own personal financial circumstances, and this is not a recommendation to invest. This is purely a showcase of both organisations. There's a lot more information, obviously, on the Ethex website if you'd like to follow up after the session. And we will be sending out a follow-up email so we can address any further questions or provide some more resources if we think that might be helpful. So thanks for joining us again. First of all, we are going to turn to Dirk to give us an introduction to the Triodos Pioneer Fund. So if you'd like to go ahead, Dirk, and give us the highlights, and then we'll move on to George.
Yeah, okay, thanks very much. Hope everybody can hear me okay. So Triodos, actually this year, Triodos Bank exists 40 years, so a milestone in our existence. The fund, the Triodos Pioneer Impact Fund, which I'm managing, has been around slightly shorter than that, but well over a decade. And I joined myself to take over portfolio management of the fund in 2017. So that's briefly on a little bit of history of the fund. The way that we've structured the fund is looking for investments that, in our view, support the transition towards a more sustainable society. And to that end, we've identified a set of themes, investment themes. And those, well, transition themes, if you will, nicely communicate with the UN Sustainable Development Goals. So the 17 overarching goals that have been set to be achieved by 2030. The themes are in the realm of food and agriculture, renewable resources, social inclusion and empowerment, infrastructure, etc. And within those buckets, we try to identify investments that not only contribute to a better society or environment, but also provide a nice financial return for investors in our view. The Triodos Pioneer Impact Fund is well, part of a broader range of funds. So we have an equity fund which focuses on the larger companies. We have a bond fund. Very recently, we also launched a UK bond fund. And we have a mixed fund, which is equities and bonds mixed. And this fund focuses predominantly on smaller and mid-sized companies. For smaller companies, there's a nice growth trajectory. I also find that smaller companies are more focused on a single product or single service or single solution that they provide in order to, well, get us towards that more sustainable society. So if we look at the fund currently, it's spread geographically. Roughly a fifth in Japan, where sustainability is truly on the up and up, not only thanks to the companies, but also due to government initiatives. Roughly 35% in Europe, and the remainder in North America. Yeah, the fund has good performance this year. What you see is performance is not only driven by what you own, but also driven by what you do not own. Since we are an impact fund and focusing on thematic investing, we go beyond best in class, we go beyond exclusions, but it also means that we don't invest in traditional hydrocarbons, so we have exclusion. So typically, performance this year has been well, up and down with COVID, but far better than the broader market index. So the fund is up 4.5% versus an index that's down 7%. So we've done remarkably well. And what we tend to find is that companies that have more a sustainability angle and fit with our transition themes, but companies that are also governed well and treat their co-workers better in terms of having a more, well, social focus, tend to outperform companies that are in it for the short term. So yeah, with many words having been said, I think that's a good introduction for now.
Great, thank you, Dirk. I think that's excellent. George, could you give us an overview of the WHEB Fund?
Sorry, I left myself on mute there for a moment, but thank you, and thank you everyone for tuning in and for giving us your time today. I'll try and introduce the WHEB Fund without duplicating too much of what Dirk's just said. But so WHEB is a small investment business that many of you will not have heard of. We've been around for more than 10 years though, and WHEB Asset Management is a business. WHEB stands for Wiley Hayworth Environment Business. That's the original names of the people who founded the organization many years ago, with a focus entirely on investing in environmental solutions. And WHEB's investment strategy is wholly built around investing in companies which are enabling and benefiting from the transition to a more sustainable and zero carbon economy. The idea we had behind the business, because we set up the investment strategy over 15 years ago, and in another place as part of a large multi-strategy organization. But we wanted to come and build a business together where the whole business was defined around sustainability. And so we only do one thing. We run a single investment strategy, which is a global equity mid-cap strategy. So invest in mid-sized companies listed on stock markets around the world. but we want that sustainability philosophy to identify with the firm, the business that we run, as well as much as it does, and as it does through the strategy that we manage, the investment strategy we manage. And that hence why we've become one of the original B corporations or benefit corporations in the UK. Benefit Corporation, I don't know if some of you may be familiar with, is a global movement of business as a force for good, which is a certification standard for business around the world. There are around 3,500 businesses which are certified as a B corporation. And it really is a standard for how we run the business as a whole, with respect to all the stakeholders in the business, as opposed to just the shareholders in the business. And so it's that philosophy that comes from the outset, of the starting point of our business, that's really important, and then runs through into our investment strategy. As I say, we're looking for businesses where, given that our overarching view, our overarching philosophy is that we are, as an economy, in the very early stages of a major industrial transformation, of a major transition to a zero carbon and more sustainable economy. And we want to structurally build our portfolio around businesses which are enabling and benefiting from that transition. So we're looking for the businesses which are part of the solution, businesses which are providing solutions to those major challenges we face as a society, and that is therefore their source of growth. Because as the economy changes, as we go through the transition to change the shape of the global economy into one which uses less resources in order to provide better standards of living for a growing population, then it's the businesses which are part of the solution, which are the businesses which will be able to grow over the long term. Conversely to that, the businesses which are part of the problem will be the businesses which go backwards, which will suffer in their performance and will find it more difficult to grow, or will see their profitability shrink. And so by only focusing on those businesses which are providing solutions, which are having a positive impact on the world, that is how we tap into markets which are growing faster than that of the average and outgrowing that of the rest of the market or the rest of the global economy. So we only focus on businesses which are providing environmental or social solutions. So businesses which are involved in providing health or education or safety or well-being solutions, or businesses in the environmental themes which are providing cleaner energy, more efficient use of resources, environmental services, water management, and sustainable transport. So it's companies which are solving some of those major challenges, that's how we find the markets where companies can grow in the long term. And because we're only focusing on those businesses which are having the positive impact on the world, then we're able to start to measure and report on how that impact translates, is generated or associated with portfolio companies in the portfolio. And so over the last 6 or 7 years or so, we've become seen as one of the pioneers of this emerging techniques of impact reporting and impact measurement on the portfolio. And we see that as a crucial part of our transparency with the outside world. By being a B corporation, by setting up the business to want to be run in a sustainable way, in an ethical way for all our stakeholders, we see transparency as a crucial part of that. And so we've invested a lot of time and effort and money into building our impact reporting that enables investors to see how their money is working to create better solutions and better outcomes in the real economy. Through the companies that we're invested in. And so in our impact reporting, we built the impact calculator, we built the impact map on our microsite, and it enables investors to connect, to understand and have a relationship with their investments that's different to the way that traditional investment managers have this rather more narrow relationship with the way their savings are working. I think that's one of the crucial dimensions or crucial features around impact investing, is to enable people to build this different kind of relationship with their savings, because their savings are working towards better outcomes in the real economy. So hopefully that gives you a bit of a sense and an overview of what we do at WHEB.
Thanks very much, George. And, both of your explanations have kicked up a few questions from myself and also from some of the participants. So if I might just delve straight in. So you talked there, George, about how overall the sense that businesses who are doing good things, if I break it down to its basics, will tend to perform better in the long term. To what extent is there data now to show that that is becoming a positive trend?
I think there's a growing body. It's quite a big body of academic evidence now to support that kind of claim. So our proposition is in twofold, and the thing that you mentioned in your question that I think is really important is the idea of being long term. One of the big problems with the investment market over the last 20, 30 years is that the whole investment industry has become increasingly myopic. It's become increasingly short term. And one of the things that I think is one of the real benefits of sustainable investing is to start to have longer term thinking come back into investment. And thinking about longer term, we want to find businesses which, so there are two kind of dimensions to this. One is what businesses sell. So we're looking for businesses where the product or the service is directly providing a better outcome or leading to a better solution. So there's a lockstep relationship between that company selling more of its products or selling more of its services and that generating better outcomes for society. And that we believe, and we can see through the evidence of our investment universe having higher revenue growth than the balance of the index. We can see that relationship of positive impact products leads to faster growth markets. The second dimension is less what you run, what your product is, and more how you run your business. And that's more about responsible business, how businesses treat their workforce, how businesses treat the environment, society, how they're governed, the traditional components of ESG, if you like, how businesses are run. And there's also a good body of academic evidence, particularly some research done at Oxford University and also by Professor Gordon Clark, and also at Harvard University, showing that businesses which are run in a more sustainable way, that have a higher quality to the way that they're managed, tend to have higher return on capital, higher revenue growth, higher profitability, and more stable profitability over the longer term. And so it's both about how businesses are run, but it's important that you don't forget what businesses fundamentally sell, and that business product needs to be a useful product that's generating good outcomes for society.
Yes, and obviously, hopefully we're not just focusing on product-based organizations as well. Hopefully, we're looking at more service-based orientated businesses as we move towards a sort of low carbon economy.
Yeah.
On that point, obviously one of the attractive features of a fund is the diversification that you can achieve by investing. Dirk, you've obviously had great experience with this over the years. How are you finding the supply of good organizations to invest in to create a good, vibrant and diverse portfolio?
Yeah, good question. That's in Triodos's case is the process is very stringent, and just as George mentioned, first of all, we set out to find companies that provide a product, service, or solution that we deem beneficial to the transition towards a more sustainable economy and society. So that is step one, if you will. Step two in the process is while you create or deliver that product or service, is there no harm done on any other side of the equation? You can imagine the sustainable development goals are in that respect a recipe and not a menu. You can't pick one and do damage on another one. So what we truly want is that while you create that product or service, you treat your workers well, you treat the value chain well, you respect biodiversity, etc. So narrowing down the funnel from step one, product service, to step two, no harm done, and that's evaluated by a team of analysts that work well on a very stringent basis with Triodos's minimum standards. that narrows yeah, your investment options down quite a bit. So you eliminate a lot of in first instance, at first glance, good ideas. But still, we tend to find quite a few good ideas to be able to create a portfolio that is both concentrated. So it's not like an index fund or a tracker and all over the place, but it's also well diversified. So currently we have, well, roughly 40 to 50 names at any given point in time in the portfolio, and spread nicely over the themes I previously discussed, but also over MSCI sectors, so industrial sectors in the world, and over regions. And you can imagine you can also diversify within said buckets. So for instance, one of the themes is prosperous and healthy people. You can imagine you can find ideas there that are of a medical nature or medical equipment nature, but next to the cure element, there's also the prevent element. So sporting goods can also be part of that thematic. So within the themes, you can also create your diversification.
Yeah.
So that's the way we look at it, and yeah, as I said, 40, 50 names create a well-balanced portfolio. And as George mentioned, academia says you don't need any more than that.
So something else that was mentioned earlier was, George, you mentioned that you are yourselves a B Corp now. Congratulations. And that obviously defines the management of WHEB itself. But there has been more discussion in the industry around certification of funds themselves and particular standards, because both of you are trailblazers effectively in your sector of the market, and you achieve good products for the industry and for retail audience, which are recognized with you've both been award winners for certain categories of investment products and things like that. But to what extent do you see standards becoming a part of what you do? Is it possible? Will it stop some of the potential greenwashing that I think we're beginning to see with some new funds which claim to be climate based, but that might actually just mean they only have 10% of fossil fuel related companies within them? Be quite a big difference between what they're doing and what you're doing. So George, first, how does the prospect of standards affect what you do, and what's your thinking on it?
It's a really good question. It's a really complex question to answer in many ways. I think there's what we can do ourselves, and then there's how the industry is evolving to sort of become more mature around this space. So I think both. I mean, I've been involved in this space for 20-something years, and as Dirk says, Triodos has been around for quite a long time as well. So I think we all feel a little bit like for a long time we've been shouting in the wind about what we do, and suddenly in the last 2 or 3 years, then we're seeing a wave of interest in this space, and that's leading to and that's fantastic in many ways. It's wonderful that there's so much interest in this space, and it's being driven by client demand, because it's what people want to see. But there is, at the same time, there's a sort of wave of competitor interest of every other financial organization saying that here's a bandwagon that we can leap on. And I think what sets organizations like Dirk's and my own apart is the unique focus in this space, the heritage we have, and the authenticity that we can lay claim to. Now that we can generate ourselves by being transparent. And I think the sort of transparency, the governance, and the alignment that we can wrap around our businesses as being uniquely focused in the space is, we have an ability to do because we're small and independent, and we can make decisions that other managers can't. So, for example, we have an independent investment advisory committee that sits outside the business, that's staffed with independent people who have a specific role to challenge us on every holding in the portfolio and how it fits the definition, and how it's consistent and has good integrity with our investment process. And we then publish the minutes of that meeting. Now that's a unique form of transparency and challenge and governance that the average investment manager would never be able to put in place. So it sets us apart to some degree. I think if you asked me this 10 years ago, I would have said that the biggest problem in the industry was the intermediary industry, that you always had investors and you always had both pension funds and institutional investors. You also had individual investors who were always interested in this space, but quite often people would go to their financial advisor who would turn around and say, well, you don't want to do that. You might as well give your money to charity, because it was the industry, or the sustainable investing industry wasn't really understood by financial advisors. But we've now hit a tipping point where consultants, advisors, and the intermediary industry is really having to react to this change in demand from clients, and also the change in supply from the investment industry. And it's having to provide more of a service to its customers to be able to show them to the products that are good and genuine, and away from products which are less good and maybe greenwashing. And so I think there's a real role that is evolving for consultants and advisors to help people through this. And alongside that is standards and ratings and awards and that sort of thing. So there's a very good organization, for example, called 3D Investing, set up by somebody called John Fleetwood in Cumbria, that we've always thought was run with very good integrity. They've just merged with a more established organization called Square Mile Investing, which will enable his intellectual property to be taken to a broader sort of group of customers. We're one of the founders of something called the Big Exchange, set up by Big Issue Invest, which is a platform that's being launched to specifically focus on funds that are focused on a positive impact. So there are more and more intermediated organizations that are trying to establish what is genuine away from what is greenwash. So I think in the end, consumers should get more help in this space.
And what about the businesses themselves, Dirk? How transparent is the process in terms of inclusion into the fund, for example? Someone asked a question, are you able to work with companies that are just miss out, if you know what I mean? So you want them to be able to be eligible for investment. Is there any ability to give feedback so that they know that how they could be included, or would more transparency enable more businesses to know what steps need to be taken to be included into these positive funds?
Yeah, so the way we look at it is when we first look at a company, immediately we start our engagement process. So first we engage with the company for information. We like your investment proposition, but we need to know a little bit more about X, Y, Z. So we pick up the phone or write an email and start talking to the company. What we typically don't do is we're not a ratings-based organization. So there are many investors that claim to be impact investors or sustainability investors, but are basically rating maximizers. And what we think is one, ratings are always backward looking. We want to look forward in analyzing our investments. And two, ratings often measure the quality of reporting and not so much the quality of behavior. So what we set out to do is investigate a company ourselves based on its merits and our own criteria, and do that through engagement. It might be that a very tiny company does not have a rating because it doesn't have the resources to produce an annual sustainability report. But might be a very interesting investment proposition, and that will get included in the process. I think many peer investors that George also mentioned are on the side of, we will create a normal portfolio and then pour a little ESG sauce over it in the end. I think that's not what we do. And I don't think it's what WHEB does as well. Yeah. We start with impact, and we start with companies that have good behavior, good products, good services that help society. So I don't think many companies will get lost in translation because they don't have a proper rating in our investment process.
Yeah, interesting. Just in terms of the decision-making process, I mean, obviously you have key criteria that you're looking that organization meets. Someone's asked a question about diversity of the people who make the investment decisions within your organizations. To what extent is that something that you think about, and how are you adapting to that being a much more important, obviously it should have been important for a long time, but it's much more prominent now in people's thinking?
Yeah, that's a good question, and you're asking a very small subset of portfolio managers, of course, who look the same in this Zoom square. But I think we have first of all we have a real team approach. So it's a team that discusses ideas. It's a team that fortifies decisions. And yes, we like to think of ourselves as we are not male, stale, and pale, but very diverse, and so different people from different cultures, different genders, different backgrounds, even different educations. So we've built a true team that is from all over the globe and attended different types of schools. So we think of ourselves, and George already mentioned it. Being a sustainable investor is also about not just about investing in sustainable companies, but also about your own behavior, being diverse, being responsible, and being transparent. So I think that's quite key in the whole process. It also makes for better informed decisions when you can look at it from more original angles, I think.
Yeah. And
it also makes the whole process a lot more fun.
Yeah. Good.
Yeah.
How do you deal with that?
Sorry, say that again.
Same question to you, George.
Yes, no, I think in a way it's got to start with culture, really, and it's got to start with creating a culture which is embracing, as you said, as Dirk says, we think that we can make better decisions the more diverse inputs we have into those decision makings, and fundamentally that is our purpose, is to make good decisions, and so we need to build the best structure around that can support it. There are a number of organizations. I mean, being part of the B Corporation movement, we're a founder investor. We're a founder of something called City Hive, which is expressly working on financial organizations and how they can build a diversity better. We work quite closely with organizations like the Social Mobility Foundation. And I think that we need to think about how we don't pretend that we've got all the answers at all. We're a very small organization. We want to try and grow the culture so that as we grow, that we develop the most diverse set of forms of inputs into our decision making and our intellectual property.
So you mentioned previously around the intermediary space and how you interact with IFAs and other intermediaries. Now, obviously, both of your funds are open for retail investors to come to you, but I would imagine that the vast majority of introductions come through, intermediaries and IFAs. How are you seeing the IFA world evolve? Somebody asked a question about to what extent, are IFAs asking the right questions of their individual clients to get them the best results in terms of environmental and social goals. Are you seeing a transition in the IFA world? George?
Yes, it is definitely changing. It's slow and it's very dependent on who you're talking to, because obviously it's a very broad church and some are sort of getting it faster than others. But I think more and more we're seeing IFAs, IFA groups realizing that unless they can develop solutions that work for their clients, it's not going to be good for their business, and they're going to miss out on clients are going to take their business elsewhere where they can get the advice that they need. So we're seeing genuinely, I think over the last few years, the last 2 or 3 years, we're starting to see a sort of real snowball of activity with IFAs and advisors and intermediaries of all different types starting to engage much more fundamentally with this industry. Now, the challenge is that they want simple solutions, and they want sort of answers that can tick boxes for them, that they can easily implement, and that doesn't always lead them to the right solutions. But this is the early foothills of this industry really hitting a tipping point and starting to engage this moving from niche to mainstream, I think, and that all investors will increasingly see some flavor of more engagement with the whole agenda through their investments, in some places at a more fundamental level than others. And there are still the sort of specialist advisors who've been doing this a long time who will understand it more closely, and there are others who see this as a small part of their overall business. But I think that the tide is moving, and it's moving in the direction of this. I think we've gone past the point of no return, if you like, that this is spreading across the whole IFA industry needs to understand this, and it will become much more prevalent in the conversations between IFAs and their customers.
Yeah.
To add to that, I think it's also the role of pioneers such as Triodos and WHEB to educate the IFAs, and to help them better understand the investment solutions and the investment products and the implications of sustainability on those products and on the outcomes of those products, be it financial or impact outcomes.
Do you see a difference between sort of UK and Netherlands in terms of the sort of evolution of the IFA market?
I think IFAs typically in the UK, but also in continental Europe, are quite well informed. I think the questions they're asking are quite educated, and most of them are by now able to distinct or to make a distinction between this is pure impact and this is less so. But I still think there's ample room to help them grow the understanding and increase the size of the total pie.
And you mentioned it's part of your role to educate, and someone's asked a question about whether both of your organizations provide any specific guidance or training for, you know, asset managers or investment managers who are trying to learn more about this side of the market?
Yeah, yes, I mean, part of our transparency in a way is that we're very public about what we do and how we do it. So as we develop, for example, our impact reporting, we publish our impact report every year, and we also run now a webinar in terms of explaining how we developed our methodology. We also publish the whole methodology document behind our impact reporting approach, and so so that's one aspect of it. But we do increasingly with the with sort of the industry bodies and the professional bodies for financial advisors. We quite frequently run education sessions for them to help them understand better about how the market is evolving and the different approaches to sustainability that can be integrated within an investment process.
Mm.
Yep, same here. We've just like WHEB invested quite a lot over the past years in impact reporting and impact measurement. I think that landscape will evolve and become more mature over time as well. And transparency is obviously key. And next to that, we also do a lot of bright talks for clients, prospects, etc., to help them understand the heritage and the philosophy of our firm and
do you feel that that is also something that individuals can use to help poke their IFAs and, you know, say, look, here are the opportunities, and, you know, sometimes it needs to come from the individual to really pull forward quite dramatically the viewpoints perhaps of their IFAs who have a more sort of traditional standpoint?
I think in the end, the asset owner should have the final say in how he or she wants to invest and consume their savings. What outcomes do you want to help your savings steer towards, and what is the kind of world that you would want to consume your pension in? So I think it's also not only the role of investment companies such as ourselves to educate, but maybe for the asset owner to demand that their IFA be better informed.
Yes, and by asset owner you mean the retail investor.
Yeah,
exactly. Yeah.
So
I mean, you can ask, just asking very simple and open questions of your financial advisor can help. You know, how are my savings going to perform in a world which is transitioning to a zero carbon basis? What is that going to do to the investments in my portfolio? And am I going to be damaged by that, or am I going to benefit from that? You know, how are you protecting my investments in a world that is transitioning to a zero carbon and more sustainable basis? And you will understand from the answer whether you get a blank face and a sort of or whether you get an engaged response from that, you know, as to whether this is something that your financial advisor has thought about. And so I think just asking very open questions can be very enlightening as to whether you have a financial advisor who is able to engage with these questions and this topic, or not.
Yeah.
And if they can't answer the question, then they're liable. If they've got clients asking the question, they're liable to go away and think about why they can't answer it, perhaps, and work out. I think do better next time.
So we talked a little bit about someone's agreeing that here's to more poking of IFA.
Yeah, well, supposedly there is. I mean, there is. Again, it slightly depends on how it gets through after Brexit, but there is an incoming regulation that comes with under the glorious title of MiFID II, that is supposedly, if the UK aligns with it, will force IFAs to ask more proactive questions of their clients. So there is regulation that should support more engagement from IFAs as well.
Yes. So you mentioned it, not me. So Brexit.
Oh,
Um,
I regret it now.
to what extent do investors need to worry about the effect of Brexit?
It depends where. I mean, I think both Dirk and our portfolio, the WHEB and the Triodos portfolio that we're talking about, are both global portfolios. So, so most of our investments are actually outside of the UK. So, in terms of the portfolio and the and investors' capital and investors' savings, then that isn't the biggest issue for us. In many ways, the biggest issue for us as a business has been how do we continue to service our European clients after Brexit. So it's more about the structuring of the investment industry and how we are able to provide investment services for European investors from the UK. And as a result of that, we're having to launch a whole new product for them, doing exactly the same thing, only an investment vehicle that's based in Dublin to go alongside the investment vehicle that's based in London that we already have. Yeah. So that it is so that's something we're doing in order to maintain and grow our European client base alongside our existing UK client base.
Yeah, and I would say similar. It's a global portfolio, so investments in the UK are limited of size, and I would say, luckily, Triodos already has a UK bank branch that obviously distributes the funds, the whole fund range in the UK. So we're well placed to survive a Brexit in that respect.
Well, that's raised a question for me, and it relates back to one of the earlier questions regarding sort of localization versus globalization, and here we're talking in a UK retail investor perspective.
Mm.
But we're talking about investing in global companies and the majority not being UK based. How do you deal with that from a sort of philosophical point of view, George?
Well, we have to be on it now. Our portfolio is a global equity portfolio invested in listed companies that are listed on stock exchanges. The opportunities to invest in listed companies just in the UK is more limited with a focus on sustainable solutions. Now, I think so we can't address all of the challenge and all of the need, and clearly there is a need also for investment in smaller scale, more localized businesses. And I saw that question come up in terms of about relocalization and local economy. And I think it is a crucial dynamic. It's not one that we're going to address through listed markets, because that is just leading us to companies which are operating at a larger scale on a more global basis. We need the two things to work in tandem with each other. The problem with smaller scale local business which needs support is that they need financing mechanisms which are often not available to retail investors, because they may be through private structures or the like, which are more difficult for retail investors to access. And so there is a supply an investment supply problem there that we need. That to be honest, we don't address at this stage, but and there's a definite need for it. Perhaps one of these days WHEB will be able to provide products that help that as well, but that's not where we are today.
Yes, and I should point out that obviously part of Ethex's proposition is to fund more of these grassroots localized organizations, and our hope is that that will only grow in the coming years with this newfound sense of community and needing to build back better, and that's starting obviously on the ground as well. So
exactly. So we said we don't replace that in any way. We'd hope to be complementary to that dynamic and to support that dynamic, but sit alongside that. You know, in terms of what you can achieve through it.
Yeah,
I think the two can nicely coexist. So within Triodos we have, just as George mentioned, an arm that invests in listed securities that are listed on stock exchanges. But we also have an arm that does more private investment and in local communities, be it in the Netherlands or perhaps in emerging markets.
Yeah.
And when we invest for outcomes, I think there is a local element to the impact we want to have, but we must also not forget that a lot of the challenges we face as a society are global problems, and require global solutions. And maybe there is a company somewhere in Japan that can work out a solution that benefits the rest of the countries in the world. So we mustn't forget that we're all in it together.
Yeah, absolutely. And someone's asked whether Ethex reports on the outcomes of the investments that are listed on the platform, social impact and environmental impact, etc. Well, to a certain extent we do, but I think both the Triodos Sustainable Pioneer Fund and WHEB are great examples of organisations that have their own impact measurement and report very clearly on it. So we don't tend to replicate what is already there. We just try and amplify and share and make it more transparent. So yes, hopefully that information is fully available both through the organisations here and through us. So we're coming up towards our hour, so I'm just going to give you the opportunity to say anything else that you feel hasn't been said, and you know, what are your hopes for the future? Dirk, why don't you go first?
Ooh, that's a challenging question. My hopes for the future is that we find more followers. And although we want to be unique and pioneering in impact investing and lead the way, we do hope that the current movement of sustainability becoming more mainstream will accelerate, and more people will come to our impact philosophy and help invest for a better and more sustainable economy and society. Having said that, that also means that we have to keep evolving ourselves and stay at the front foot of developments. I think what is key to look out for is what we already discussed. The EU taxonomy is coming. There will be more standardization in the industry and a clearer definition of what constitutes green investments. There will be more reliable and comparable data provided that should make it better to compare and contrast funds and their respective impact and outcomes. And what I'm hoping for and working hard with my team on is to keep setting the pace and make sure that we do good and we do better.
Thanks, Dirk. George?
I think, I mean, at its core, I think we hope over the long term to be able to demonstrate that you can do well by doing good, that ultimately good business, businesses that support better outcomes for society are good businesses, are successful businesses which can maintain and grow over the long term. and that should be something that is obviously good for our investors and good for our customers, but it should also be an exemplar for other businesses to follow. And if we can demonstrate that and shout about it and make a noise about it and to some extent to pioneer around it, then perhaps we can have a small influence on what the dream, I suppose, is that the financial industry, that investment in financial services should be reoriented to being something that works in service of the betterment of society. And that money is, we've come over the last 30, 40 years to worship money for its own sake, but money is a utility and it should be used to help us achieve better outcomes for society. And finance should be a utility that is the channel for doing that. And if we can be part of a movement that helps to reorientate the financial system towards a better purpose, a more positive purpose and set of outcomes, then we'll have gone some way towards achieving our mission, which is to advance sustainability and create prosperity through positive impact investments, and demonstrate there's a symbiotic relationship between those things, and so that's the hope for the long term. I hope it's not sounding too utopian.
I like that. I think it's good to finish on a positive note, and obviously I wholeheartedly endorse the view of, you know, making money do good. And I hope that everybody's found the webinar today interesting and insightful. We will send around a follow-up email. Dirk or George, if there's anything in particular you'd like to share in terms of resources, do let me know and we'll send that round to everyone. Thank you very much for taking part today. And thanks to all the participants for listening in. It's been really interesting to talk to you both, and look forward to seeing you again soon. Thanks.
Okay, thank you.
Thanks
for having us.
Thank you. Thanks so much.